Welcome to TradeTheNBI.com. This is John. This report is for the 3rd of June. Well, we start the month exactly where we're expecting. I just mentioned it Friday and that. Well, actually long before that when we talked about what we were seeing from the original DOC spread that we had back here. This dip that was coming down, we suggested that that would be a faux rally back, and it was exactly that. And then sure enough, we were just waiting for the break point, which happened right here at the rejection of the green to cyan, right there, beautiful. And we expected that 23% would not hold. It did not hold. We expected this 27.62, and also the 27.35, because when we reached this point, we still had no buy signal, because we're in a continuation mode with that orange caught between cyan and red, which beautiful continuation, continuing dropping shakeout, and dip below the red line is still in place. Of course, there are a bunch of other ones between 27.40, 35 range here and 26.35, and we'll be able to see those more in the intraday charts, but still nonetheless significant because it did exactly as the readings were suggesting. So no crazy shock. All good from that standpoint. It is interesting, though, that even within the full decline that we had here, all the way from that, go back to the 2,900 range, which was right back here when the first one came in here, right around the 2,920, to be down at, almost 2,720. It's almost 200-point move over this course of, the entire month of May. Because sell in May and go away. That's the mantra, and sometimes it proves to be true. In a clean chart here of the NASDAQ, where it had made that same attempt, it was a little bit stronger than the ES, but never got to a crossover point when they met here with cyan and green. So we knew that weakness was inherent within it, built in the fake pump, because we had, it was such a late reset here, and by the time it finally crossed over, it expended all of the power of the short-term buyers, which you can kind of see with the number of days before that finally crossed the steel crossing cyan right there. Just took too long. It all happened at the same time, gave enough of a little bit of a push, but not sustainable because there was no follow-through with the green crossing above cyan. It becomes very clear. We see this over and over and over and over again. Yes, the euro is still unable to do anything because the euro is just in the eurozone is in a nightmare zone, which is causing difficulties because there's just no propensity for growth coming out of the EU. The question is whether or not the US implodes or not, but that doesn't seem to be happening. The pro-growth policies make a difference because they create enthusiasm for growth. Throw in the extra tariffs and things like that. The potential for inflation and everything was what really everyone's been looking at, and/or tensions globally. Trump going to Britain shouldn't make anything any better for the euro, and sure enough, that's, given what we saw was the impetus of gold here as things were turning around. We started to see the build of the DOC red moving into the new zone. That was enough to suggest that we should see a breakout, and sure enough, boom, there it is. We met cyan to green, and there's a reverse of what we saw in the ES and everything else. Green above cyan, and you can see the reaction very different. A little bit overbought, but that's going to happen with commodities like these. They tend to go to super extremes. Nonetheless, still worth following. Friday's action was very nice, despite the easy, I could shrink it some more, but not necessary. We had the nice buy signal that came in down at the bottom base of it, peaked up right here. The ABM value is right around 2767, so almost 2670 range, and the sell came in and it never converted from that. Even if we expanded here, you can see. You'll see these steel, because I don't have the underlying GAM function on this one, just so you can see. The break from the short neutralized in this signal area right here, but staying red as a predominant trade. We had a brief signal point where this was actually a decent config with the rising, but you can see it just held across and wasn't able to produce anything. Once it got to this point, you started getting back and forth to kind of let you know that rally wasn't going to happen once you rolled over on the red right there, so it was pretty quick to see the 52 range. That was probably not going to hold right there. And sure enough, it held quite a while though. I mean, pretty much stayed flat, just couldn't produce anything. And then of course, we were already in pretty decent continuation zone, which was just meant to go sideways, blah. To the negative though, with cyan above green. And then sure enough, futures open and we get right to the 35. Actually took it out. So we did, what was the low? 32. So just below it, but kind of hovering right around back and forth at that same level. And decent configuration here with the deep red. The fact that it's moved so far above negative 13.5 though means unlikely for this brief rally to hold. So keep that one in mind. But we're starting the month spot on. Love it. As always though, I will put up anything relevant on the Skype chat. Trade well.